Well, as we look at the markets right now, do not forget that you could call what we've seen since the election the Trump euphoria, markets marching into record territory since the election. And the Donald Trump tweets were very quick to talk about the stock market specifically today. He said, stock market hits new high with longest winning streak in decades, great level of confidence and optimism even before tax plan rollout. Let me bring in the traders. Here in our Fox Business Floor Show, I took issue with one thing President Trump said earlier, and that was, you won't hear about it. Nobody's talking about it. Fox Business has absolutely been talking about it, Keith Bliss, but we're fair and balanced, and now we're talking about a slight pullback here. Is this just a little bit of profit taking or some real nervousness as the Dow crosses the unchanged line 77 times in one session?
Yeah, I wouldn't call it real nervousness out in the market. Nothing that we're hearing from clients and colleagues alike would suggest that the volumes continue to be pretty light, which is not unusual when you're trading at the all-time highs or the all-time lows like we were back in March 2009. So I think people are just taking a breather. Listen, when you've seen it before, Liz, and we've talked about it a bunch of times when I've been on the air with you. When the markets run this quickly, this far, this fast, they have to take a back seat and take a breather. People take stock of their positions.
Totally normal.
Yeah, exactly right. There's a lot of analysis coming out now. People are changing whether these are buys, holds, or sells based upon valuations now. So you're seeing some of that churn go on. But I see no reason to believe why this market is not going to keep creeping higher. All of the major indexes are well positioned to move forward, most notably the Russell 2000, which is the biggest index for me to watch right now. And I just see this thing marching higher. I do wish, one last point, I do wish that Trump and the administration would get back to talking about the economic things instead of talking about the Russian leaks all the time. And that would keep the market really moving forward, too.
Well, to that point, Larry, there does appear to be a slight disconnect up until now between the market muscle that we've seen and then the turmoil that seems to be off message, the message that the markets want to hear about, which is infrastructure spending, cutting regulation, and, of course, a tax plan. How long does that last?
Yeah, you know, it's hard to believe that Trump and the administration has been given so much slack on this. I mean, the tax reforms, I mean, when you think of, like, perhaps Ryan and Trump's agenda could add $8 earnings per share to a valuation, which would bring S&P 500 down to a 16 times valuation, which isn't bad. But the fact is, I think he's been given a lot of slack because around that, we have to keep in mind, this is the middle of a cyclical recovery. That's what we're in right now. I mean, global profits are higher. Business capital expenditures are up. I haven't said that in 7 years. Industrial production, also inflation numbers are up. I don't think we're going to race to the moon. I still think we're going to struggle through single-digit earnings this year. However, that's where we are right now.
Good to see both of you. We're watching earnings. We're watching everything at the moment. And I can tell you, we love watching you guys. Keith and Larry, thank you so much for your perspective.